is at irrational levels. 65% of regional housing markets and 96% of metropolitan areas are overpriced, according to Black Knight and Corelogic. Mortgage originations dropped by 27%, according to Wells Fargo. Banks and mortgage companies have already started laying people off, and according to Redfin, 12% of homes for sale have reduced their selling price in the past month. Not to mention, the Fed is raising interest rates, with mortgage rates jumping from 3.1% to 5.1% in the past couple of months. Anish, are we in a real estate bubble?
You know what? I don't think so.
What's up, everybody? I'm Sean McMurray, and drum roll, please. This is Anish Dave, and we are BPM Reia, or your Broward, Palm Beach, and Miami Real Estate Investment Association. But don't get it twisted. We cater to national markets and real estate in general. Today, we will answer the question that a lot of people are asking: are we in a real estate bubble? Why would this be important to you? If you are a first-time home buyer or an investor for that matter, you want to know if you should buy a home or investment property right now or wait for the crash. I felt it important to bring my mentor, my partner, and the president of BPM Reia on the show to share with you what he thinks. He has over 20 years in the industry, has been involved in $250 million in real estate transactions, and is a survivor of the 2008 real estate market crash. So his insight will be invaluable to you. Anish, again, are we in a real estate bubble?
You know what? I don't think so, Sean. Not even close. I mean, maybe a correction.
Okay.
Before it was easy, being in real estate and the prices are going up. So
Right.
This is the time for real investors, or having a team of people that know what's going on in the market.
Right.
If anything, maybe it's the only bubbles we might see is champagne bubbles if you're on the other side, right? If you're you know what you're doing, so it can be exciting.
That makes a lot of sense. A lot of folks are making comparisons to the 2008 housing market crash. As you and I have discussed privately, that's not really an apples to apples comparison. Give us a little insight into how the 2008 housing market crash affected you and why this isn't a fair comparison.
Yeah, not even close, Sean. So the funny part is, 2008, I kept buying and buying, and I thought I was leveraged and diversified, different markets, Tampa, Miami, high end. And I wasn't. And I think one of the things with lending being so easy, my background being in mortgages, you literally just had to breathe to get a loan.
Right.
And when I hate to say it, my cleaning lady, no offense to cleaning ladies, when she was buying 3 properties and she was also an investor, big difference versus right now. So
Right. Okay. There you have it, folks. If that's all you were looking for, you have your answer. We are not in a real estate bubble, but you'd be smart to keep on watching. Don't just take our word as gospel. We are going to provide the supporting data on why we feel this way by comparing it to the 2008 housing market crash. We'll wrap it up with whether we feel you should buy now or wait for things to cool down. Let me interrupt for a quick second with a word from our sponsor, us, BPM. If you are interested in learning more about real estate, flipping and wholesaling homes, we offer a few programs. My favorite offering is our mentorship program. I joined this program a few years ago, and I love it. The beauty of this program is you have a real, living person helping you through your real estate career, and we fund all deals 100% and split profits 50-50 with you. You pay for the program once, and you never have to worry about paying for real estate again. It takes all the risk out of it. We also offer a BootCamp, which is also an amazing program. It's an interactive 2-day event where we will get you up to speed on wholesaling and flipping homes in a fun and engaging manner. You can't go wrong with either of these programs. Now, back to the video. The housing crash of 2008 was one of the most horrific periods in U.S. financial market history. It's a period that many of you watching lived through. Although if the 2008 housing crash is a mystery to you, watch The Big Short. It does a really good job of explaining what happened. If we had to sum it up into 4 contributing factors, we could classify them into lending standards, mortgage rates, equity, and supply. Poor lending standards and the prevalence of subprime loans were probably one of the leading contributors to the housing market crash of 2008, and one of the reasons we believe there will not be a repeat. There's a scene from The Big Short at about 50 minutes in where Mark Baum, played by Steve Carell, is talking to two mortgage brokers about their practices. At one point, they begin talking about ARM loans, adjustable rate mortgage loans, and then one of them mentions ninja loans. No income, no job, no assets, ninja.
Do applicants ever get rejected?
Seriously?
Absolutely asinine. Since then, regulations and restrictions have been tightened, most notably Dodd-Frank. I've just gone through the process of purchasing, refinancing, and shopping for new real estate with the help of Anish. If something doesn't make sense, they'll call you out on it and ask for clarification with supporting data. Banks are adhering to the rules, or they risk millions and even billions of dollars in fines. Mortgage rates have a direct impact on the price of homes. The expectation is that for every 1% increase in mortgage rates, there's a $10,000 reduction in purchasing power. When interest rates are low, this encourages investors to enter the market. In the 2000s, speculation was rampant along with largely unregulated adjustable rate mortgages.
That's a mouthful, yeah.
Yes. So these loans saw a low introductory rate followed by a dramatic increase after a fixed period of time. Well, folks, adjustable rate mortgages are much more regulated than in the 2000s, and mortgage rates are increasing. Mortgage rates are actually at the highest level since 2009 at about 5.75 to 5.94% for a 30-year mortgage. This has caused a slowing in the growth of home prices, but no significant reduction in home prices or a crash. This is in part to the low supply compared to demand of homes on the market, which we will discuss later. This is more in line with what we expect to see, a slowing over time and slight reduction in certain markets over the next few years. In 2007, people were buying homes with no money down, and poor lending standards and ninja loans meant that people were getting into homes with little proof they could actually afford them.
Come on, I'm broke, baby. I ain't got no money.
This worked out while the market was good. If you ran into issues paying your mortgage, sell the home with profit and move on. Although it was another story when home prices turned south.
Everything is fine.
What?
There's nothing to worry about.
With little to no equity in their homes at the time, homeowners had little to no cushion to absorb any reduction in home prices, leaving foreclosure as the only option in the event they no longer could pay their mortgage. This led to more supply of homes on the market, further leading to home prices falling quicker than Will Smith's career after slapping Chris Rock on stage. Today, homeowners have much more equity in their properties. According to CNBC, the average mortgage holder today has $185,000 in equity. This is a nice cushion for any downturn in prices. Lastly, let's talk about supply. In the years leading up to the housing crash of the 2000s, new home construction outpaced demand, which caused home prices to drop very quickly, which increased foreclosure, therefore increasing supply on the market, causing prices to drop even more. These conditions do not exist today. New home construction has largely lagged demand due to a number of scenarios such as roan, supply chain issues, and increased building regulations. The National Association of Home Builders reported new home construction in the U.S. averaging around 9 to 11 million housing starts per decade from the 60s to the 2000s. The past decade, we only saw 7 million. Every market is different, which is something that you and I talked about, but it is certainly evident here in South Florida. It reminds me of Mosquito Girl from episode 2 of One Punch Man. You have 10 million mosquitoes fighting for the same 4 drops of blood. It becomes a frenzy with nothing left behind. We are seeing 4 walls with barely a roof standing in the worst of neighborhoods, pulling in crazy numbers. Yes, we walked through one of those crazy properties as well. I love the natural sunroof, by the way.
You mean the skylight, right?
Yeah, the skylight. I don't blame these folks, though. They're doing what they must. It's just madness. But things are turning around. With almost 1 million homes built last year, the construction industry is picking up steam. but it will take years before there's a proper balance. In conclusion, we see a slowing in the rise of home prices and in some markets a slight drop, but not bubble-like drops. And Anish, should homeowners or investors continue buying homes or wait for a potential drop?
Listen, I would be buying right away because it's always a good time, especially if you're going to live in it. If you're going to live in it in a long term, grow up, have your family in there, so you're not really worried about the prices going up or down, really, because you want to raise a family.
Right.
And you want to get in before all those northern people, and I come up Jersey too, and the Californians who come in and gobble up all our stuff. So.
Yeah. And that's actually a good, an interesting point, because I know a lot of folks, once they went upside down, they just foreclosed. But had you actually held your property,
100%, you would have been some, and you would have been up, right? So it's about cash flow. So you want to make sure, as long as you plan ahead for that rainy day, you're okay, right? So in the long term, real estate's always been great.
Okay. Well, there you go. All right, folks, you heard it from the master himself, the man of the hour, Mr. Anish Dave, president of BPM Reia. Don't forget to like, comment, and share the video. This is a new format for us, so it is largely experimental right now. Let us know what you liked and what you didn't like. We are more than willing to adjust fire to ensure you're receiving the message in the best manner. All right, folks, thank you.